Hey, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is 4:59 in the a.m. Eastern Standard Time. Let's get to the news first. We had a leftist win the presidency overnight in Mexico. He takes office on December the 1st. Let's begin the day off with a rundown of what our agenda is going to be. We're going to go over the pre-market activity. Then we're going to segue over into the charts that our members submitted for me to review. And then we'll leave off with a chart that everybody really needs to keep in mind, and that is the yield curve. We'll talk about the yield curve, which again last week hit multi-year lows. So let's get to it. Let's kick things off with the NASDAQ because a lot of interesting things happening over there. We really rallied strong on Friday. As I mentioned to members on the week ahead commentary yesterday, it's posted in the members area. Members, if you haven't watched it, please go check it out. The volume last week was very, very light, as you might expect. It was an abbreviated week, a holiday week, a summer doldrum week. You'll probably see volume pick up somewhat this week, but still, the summer doldrums, what's coming up next week? Earnings, silly season, okay? So watch out for sales. Don't worry too much about the EPS numbers. Watch the sales numbers. And if you see misses, watch them blame the misses on tariffs. Guaranteed. It's like the weather. They usually blame the weather if you had a hurricane. What will they do this time? They're going to blame the tariffs. That's what you're going to hear about. So let's kick things off with the NASDAQ. The NASDAQ is up strong this morning, up about 1/3 of a percentage point. A very big move since Thursday. Now, the problem here for the NASDAQ is that the NASDAQ is at some resistance. So the question becomes, it's always the question, right? When you near the all-time highs, do we break out or do we break down? If we roll over, here's your line in the sand, right here. If we break down below 6,960 on the NASDAQ, it's all over for a while. So keep an eye on that support level if we fail to break out. Let's take a look at the S&P futures. They're doing well this morning, up about the same, about 1/3 of a percentage point. And they're digesting those gains. We hit highs overnight, last seen back here on the 21st of June. The US dollar broke support. So we're back down with a 93 handle on the US dollar, and we appear to be getting weaker. 93.81 is a key now resistance level. It was support. It is now resistance. So if we're talking the dollar, we're looking at precious metals and commodities, right? Other commodities. So let's take a look at gold. Gold is up this morning over a half percentage point, so it's looking good. And we've been consolidating for several days now. I mentioned this last week. We have a very tight consolidation. I think that we're moving a lot higher on gold. Silver, which lagged last week, is moving up as well, up better than gold, about 3/4 of a percentage point this morning in the pre-market. Let's check out oil. Oil is moving up today as well. So here's our line in the sand for oil. Let's call it $78 per barrel. Energy broke out last week. So the energy sector is looking good as we proceed into this coming week. We'll be talking about that with members. What else did well? Healthcare last week did well. I'm looking at my whiteboard. Healthcare. And we have other names on deck that we are looking at. The 10-year Treasury bond. So if the bond is pulling back, you can bet that the yield is moving higher. And we're seeing higher yields here this morning. Here is our uptrend channel, upper band, lower band. Now we do have a intermediate, secondary lower band support. Have we broken it? No. We're coming very, very close to it, though. So expect some support right here, probably this morning. Let's leave off with Bitcoin. Bitcoin is up this morning, 1.9% on the morning. I think we're moving higher here on Bitcoin. I spoke about this last week. We were looking for a breakout above this upper band of resistance. We got the breakout and another breakout overnight. So we're looking good here on Bitcoin. Let's segue over to members' stock chart request. The first chart up is UWT. This is the leveraged ETF of crude oil. Not for the faint of heart. If you want to get long of crude oil, you don't want the volatility, buy the USO, far less volatile. So the UWT on Friday, we flashed a bullish key reversal. We're up this morning, so we're probably going to gap up higher. I think the Stokes and RSI, well, definitely the RSI. Stokes appear poised to want to hook up, as RSI is currently doing. Volume on Friday was very weak, but again, you expect that, right? And MACD histogram is pulling back. So I think that UWT is moving higher. TheStreet.com, I've never gone over this chart, so this is the first time for me. Doing well, doing very, very well. So we were in a wedge formation. We broke out of that wedge on Friday. How was volume? Volume was good. So there are good things going on over at TheStreet.com. So I congratulate them on their share price. And it looks as though we are moving higher. And the share price is being confirmed by RSI, which is trending higher, and the stochastics, which are trending up higher as well. Ultimate oscillator trending up higher. It's a good looking chart. I like the chart. I would buy it on a breakout above and a close above. More importantly, a close above 2.29. The next chart up, Ceres Corp, CERS. Ceres is looking really good. We are in a triangle formation. We appear poised to break out. Next resistance level is at 7.64. Last seen back in August of 2016, almost 2 years ago. Ultimate oscillator, lower highs. Very extended on MACD. So, just be aware that we have a little bit of a divergence here on ultimate oscillator, MACD, again, very extended. So the way I'm reading this is that while we have a bullish formation here, which could be influencing the indicators, so we don't want to put too much emphasis on the indicators. We want to watch and see whether or not we get a breakout on volume. Here's the problem, is that you have had buyers from back here who have sat through the mother of all sell-offs, who probably never thought they were going to see their money again. Now, they've been sitting with this position as a red entry on their trading platform for almost 2 years now. And the minute it turns green, meaning this CERS position on their trading platform turns from red to green, flat, they're out. So what that means is that you have overhead supply. Buyers back here, they're going to want their money back. So expect sellers up here. Next chart up, OPK, OPCO Health. We have a breakout on RSI, a breakout on Stokes. Price, huge mover. All right, so in terms of price, the market sent us a signal on Friday, and that signal was this. While we have demand, as noted by volume, which was very good, you also have resistance above, right? Right at that 5.35 level. What was the high of the day on Friday? 5.39, right? So these buyers back here wanted their money back, and they sold. So the way to play it is on a pullback to $5 per share. You want to open up a position there? Great. Keep it small. Then I would look to buy the breakout above Friday size at 5.39. Because if we close above that level, that means that the new buyers have overwhelmed the sellers in waiting since November, December of last year. So that's the play here. OPCO looking good. Expect a little bit of selling though. ABUS, Airbus, Biopharma. Listen, I love healthcare right now. Healthcare is looking really, really good. Now here's a stock that ripped right through resistance. And I've been talking a lot this morning about overhead supply, the demand as noted by these volume bars. This is why volume is so important. Volume overwhelmed these buyers back here that just wanted to sell. It had zero problem getting through resistance, and even on Friday pulled back and retested the support level and then reversed off of it. Very bullish stuff. So I think that we're moving higher here on ABUS. And you may be saying, Bob, RSI is at 83.40. This is a biofarm name. You can see RSI in the high 80s, if not mid 90s. So, if it rallies, yes, keep a trailing stop loss order in. Allow the markets to take you out. The pullback will be nasty when it does come. So I'm not going to dismiss this, but I will not buy into the fact that simply because we have RSI above 80 that it can't move higher, right? Usually stocks make some of their greatest gains while above 80 on RSI. So let's keep an open mind, okay? And earlier I mentioned the yield curve. Folks, I've spoken about the yield curve with members mostly. I've mentioned it on Swing Trading Today a bunch of times as well. And there's really nothing to do here per se. It's a topic that is just wise to keep on the back of your mind because the yield curve has been a reliable indicator of recession for the past 6-7 recessions. And while the government is anticipating GDP of 3.7%, certainly nowhere near recessionary levels, the bond market is simply not telling us that. Right? It's sending us a signal that all is not well out there. So just keep it on the back of your mind that we have the yield curve, which is broken down to lows not seen since August of 2007. And it appears as though it wants to go lower. So what's the play here on the yield curve? As it stands right now, zero. Big goose egg. Because the markets will ignore the yield curve until it inverts, and then we finally get the news, the catalyst that will send this economy rolling over. What will it be? Will it be the trade wars? Who knows, right? It could be something that we have no idea that's out there quite yet. So what we need to do is just be aware of it, get ready to short these markets, and don't get too overly leveraged to the long side because we have the VIX. It's dropping down yet again, and people are extremely complacent. So be very careful. Members, we will be looking to put on shorts in the future to take advantage of any sell-off in this economy. I'm not worried about a sell-off in the overall markets. As long as we're aware of when to put on our short positions, we'll do quite well. And that's it, folks. Everybody have a great trading day. Be well.